everyone. I'm Sille, and I'm really happy to speak to you today, but it's a bit hard to hide my worries while I'm speaking to you early-stage startups and next generation of founders, future tech leaders. And I've decided to address this speech to you because you might be in trouble. What I'm going to do is I'm going to walk you through the current market environment, what the situation is, and give you some guidance on the way. Okay. Now let's see what the markets have been like since the financial crisis. Almost 15 years, we have seen quite smooth sailing. The numbers globally have been extraordinarily good. Tech sector has been booming. Here you see what the VC market looks like in Europe. Tech sector has been booming, as I said. For example, your investors, your venture capital fund investors, have been raising funds themselves at a record-breaking speed and amount. VC funds have raised twice as much money in 5 last years than before. Only in 2021, VC funds themselves raised 18 billion euros from their investors. And when they invest in startups, investing in startups is 5 times what it was before. Only in 5 years, it has tripled. So it is somewhat extraordinary what you have seen. And on top of that, or in the background, we have also had extremely low interest rate environment. This means cheap money for your investors. If your investors have cheap money, it quite directly translates to their return expectations, how they spend money, how they invest money. And it has been described as growth at all costs. But it has changed. Last year, the market changed in a way that Atomico describes as tectonic macro shift. You have heard about cooling of the economies and the investors losing their courage to invest because the prices have been rising. How and why? Quite clearly, the COVID pandemics affected the supply chain. But after the pandemic, what surprisingly quickly rebounded was demand. And the supply side was just not able to meet the demand and putting pressure on input prices. And this is not all. Another thing happened. War in Ukraine. And war in Ukraine triggered another layer of increase in prices. It affected the energy prices, it affected the food prices, raw material prices, and the whole Europe is depending, or was dependent, heavily depending on Russian oil and gas. So another layer of reasons why we see increasing prices. At the same time, the cheap money times were over. Central banks started increasing interest rates. Most of the startups here at this event have been established or founded during the smooth sailing times. You were born to this zero interest rate environment. So this is a new reality for you. but for your investors, it's back to normal. So cheap money times are over, and now this directly translates to what your investors are expecting from you, or what their return expectations are. And this has resulted in rather unstable market conditions globally, not just in Europe, but globally. And you have started to feel the headwinds. I don't know if you have noticed, but something that I used to see a lot on LinkedIn was the hiring badge. I mean, all the startups were hiring. #hiring, the badge, I'm hiring, we are hiring. But for some reason, you don't really see that badge that much anymore on LinkedIn. From the news, instead you can read about announcements of layoffs. Tens and thousands of people are being laid off by tech giants, from Microsoft to Salesforce, Dell to IBM. And just last week, when I had an idea what I'm going to talk about, and I had my speech in place, another blow that I have to mention here happened, which was the collapse of Silicon Valley Bank. And even if it's not directly affecting all of you, just a few of Estonian startups are registered in US and might have an account there, it actually painted the markets red globally. And the fear and worry took place on the front pages of newspapers. So clearly the cooling can be seen and is visible by now to everyone. And what it means to you as early stage startups? Another thing that we have seen in good times was that when these record-breaking funds were raised by venture capital funds, their dry powder reached also record high levels at 42 billion euros, which means they have money, maybe not exactly on their account, but they have cash available to invest into companies, either to make new investments or invest in their existing portfolio companies. Now the question is, what do they do with this record-breaking high dry powder on their account? And another trend we see is they prefer to back their existing portfolio companies and prepare those companies for rough times. We looked at the numbers, fundraising number of Estonian startups, and we have never seen that low level of those startups raising their first financing round compared to those who already have venture capital investors in their cap table and who are raising their second, third round. This means that it's getting harder and harder for those startups to fundraise who are trying to raise their first financing round. Now, Martin Villig is at the other stage, or on the other stage right now. Bolt raised more than €500 million last year. And they're doing great. They're well prepared to brace the storm. They can get help from their existing investors because their VC investors have deep pockets. But those startups who don't have those investors behind them, you really need to watch out. It's a different story with you. I'd say the party is over. But if the party is over, there's a lot of uncertainty, enormous amount of uncertainty and fear on the market. So what are the investors looking for in these conditions? Where do they want to invest? Where do they have the courage and confidence to still invest in? What should those companies do to get on the radar for those investors? And in these conditions, investors are looking for clear trends, or one of our co-investors who is going to talk to me tomorrow on the stage about startup financing, he said that they're not looking for fashion anymore, they're looking for trends. It's not FOMO time anymore. Investors are looking for something that could withstand and survive the unclear times. Investors are looking for megatrends. And megatrends are transformative, powerful forces behind global economy that basically define the future world. Let me bring you an example. In the 70s, in US, there was energy crisis. Basically left US suffering from it for a decade. But during these times, in the 70s, what happened was the age or era of digitization. Personal computers became widely used and available for households, which created the need for software. So in the 70s, in the era of this digitization, actually, Oracle and Microsoft were founded. So you can easily say that a good crisis can't be wasted. It can be actually useful if you know where to invest in and what are the winning themes in these bad times. But how do investors look for these megatrends? In current market environment, public policies, public priorities, regulatory framework, and public spending basically signal those investments that serve the strategic interests of governments and large corporates globally. Because they need to improve resilience, boost innovation, and find a way to get to the long-term growth. And very often the megatrends are in a response to a global threat. So what should you do to get funding? You have to know the megatrends. For you to be on the radar for those investors who are in those times, uncertain times, looking for the lighthouse, they're looking for megatrends. So let's start to find the signals that you should follow. Natural disasters cost only 2020 to 250 billion euros, according to Swiss Re. It is such an expensive problem for us. And it's not just the cost, but millions of people are being displaced and they never return home because of the natural disasters. We're also facing resource scarcity, and this is a problem that we might delay solving it. We can postpone it. It's something that we can leave for the future generations to deal with. But the further away we postpone it, the more expensive and more complicated it gets to solve it. We need alternative for infinite resources. And as a response, European Union has already sent a quite strong signal by getting to the Green Deal and aiming to be the first climate-neutral economy in the world by 2050. Quite recently, they already announced that they're planning to ban petrol and diesel cars by 2035. What this actually means. This means that approximately 13 million new passenger cars are being sold only in Europe each year. And only a small fraction of them is not internal combustion engine vehicles. Majority of them still being petrol and diesel cars. And there's a lot of infrastructure that needs to be built from scratch or redesigned to actually enable it. So there are just so many different things that need to happen before we can actually achieve what European Union is aiming to achieve by 2050. And they are allocating resources to do it. Already more than 1 billion euros announced to deal with the climate change and invest in sustainable technologies. So for you to win from this trend, you need to basically focus or get your solutions to green tech, because that's what the world needs, green tech solutions. Let's look for another signal. 20% of European Union population is over 65, and it's increasing. By 2050, already 30% of European Union population is over 65. And healthcare expenditure is enormous. I'm not going to even read out the numbers because it's a burning problem for all the economies around the world. To actually adjust the healthcare system to growing needs. And let me tell you that the age group that is increasing, this over 65, is actually taking up 50% of the healthcare spending of the European Union countries. Per capita, every person who is more than 65 years old spends 5 times more money for healthcare than those people who are under 65 years old. And at the same time, we have a lot of novel solutions, a lot of innovation happening in drug and treatment sphere. But we see that it's not accessible because it's not affordable. And in order for the elderly people and also cancer patients to improve the patient outcome and also improve the quality of life, this innovative health tech needs to be accessible and affordable. In Europe, for example, as a response, mainly as a response to COVID pandemic, EIB, the European Investment Bank, allocated more than 6 billion euros for healthcare innovation. So for you to win from this problem and provide a solution, an option is to focus on health tech. Provide health tech solutions to deal with what we are globally, the challenges that we're globally facing. And the third set of signals that I'd like to look at together with you is here. It's something that started with the war in Russia. War in Ukraine started by Russia, and we see that this war is hybrid. A hybrid war that requires modern warfare, and it's not about steel and iron and gunpowder anymore. It's about chips, software, optics. It's about very, very advanced technologies. And these are the technologies where private sector and commercial solutions have been advancing at rapid speed. And as a response, for example, NATO, together with its allies, is establishing a 1 billion euro innovation fund to do the horizon scanning and search, from commercial solutions, those technologies that have dual-use potential and could be used in military and defense applications. Another response that you have maybe heard of is the Diana Accelerator to even boost the tech scouting from universities or the commercial sphere. And something else that is signaling the shift is the policy change. A lot of countries who used to not invest in arming are now rearming themselves. For example, Japan and Germany. And even before the war, we could see record high military spending globally. And something that you might not even think of as a critical problem or a security concern is actually related to natural disasters, because defense and security resources are very often used to cope with natural disasters. So what the governments and the corporates need are dual-use technologies. And if you want to be part of the solution, you have to focus on dual-use technologies. Now, what can we say? Market conditions are tough. Fundraising for new startups becomes challenging, but the driving forces lie in megatrends. And there are at least three critical technologies needed to solve these issues: greentech, health tech, and dual-use technologies. So, what should you do? You should look for megatrends and reposition your business to fit into one of these. That's about it. Thank you.
So, hi. For questions, we have one question from the audience only. So people, if you want to ask questions, then insight.votemo.eu, the QR code, you can ask questions there. One question we have is it risky to build my startup now, or should I wait for the market to improve? That's a basic line question.
I would say, like I will rephrase myself and say that don't waste a good crisis.
Yeah.
Because during the crisis time, there are burning problems as well, and it depends what you want to do, but I think it's about positioning yourselves among those technologies that are not FOMO, but rather with a long-term outcome, a very long-term.
I guess if I would go further with this question is if you do have a startup that has the technology you're currently developing and so on isn't going to fall in one of the three categories mentioned earlier, is it like is there no point in going on, or is there still hope?
No, I wouldn't be so pessimistic, because like I said, the times have been good, and the investors have money. And they just become selective in what they invest in. And if your technology doesn't fall into one of these three categories, there are definitely investors who are still interested in it. The question is how efficiently you're going to build it in these changed market conditions. What's your go-to market strategy? It's completely doable, but it's more like how you do it.
Okay. Well, thank you very much.